Hi, this is Chris Matten from PwC at the RiskMinds conference in Amsterdam, December 2015. I'm joined this morning by Pierre Castagne from Luxoft. Pierre, I gather this is your first time at this event,
yes,
is that correct?
Yes, it's the first time Luxoft is sponsoring this event. We're very happy to be here.
What do you think of it?
Well, it's an interesting observation from my side. I see a trend and a shift of concern for the risk industry. I've been in the risk space for 20 years now. A bit away from, I would say, the methodologies and the way you add a market add-on to your credit risk exposure, or the way you quantify your operational risk exposure in terms of capital requirements. We're shifting now to more the aspect of how you process your risk, and obviously the operational aspect of it. And I've heard a lot of people asking questions about innovation in risk management. And if you think of it, it's a funny concept, because usually that industry is populated with people who are, because of that very serious topic, who are very conservative most of the time, and somehow not very innovative. And it's funny to hear discussion about how do we digitize risk, how do we transform the way we produce risk management.
Okay, so innovation more in terms of the technology behind risk management,
Exactly.
as opposed to, I've got the latest fancy mathematical model that does CVA calculations or something like that.
We're running away from all these financial libraries and methodologies. I see a focus, a very big center of interest of the industry on the technology. How can technology help you change the way you steer risk, not just in a reporting fashion, but how you steer your company using the risk aspect.
And what do you see as the big challenges in achieving that?
Well, first of all, as I said, I think there is a bit of a cultural challenge here. If you see, as I said, people are very conservative and are always looking at the new technologies, point number one. And if you look at the financial industry today, we're still very much ending up with paper and Excel, bidimensional
the world's most
matrix.
popular risk management software.
Exactly. And at the end of the day, I mean, think about a CRO or a CEO who is supposed to be understanding and signing off all the different paperwork. If he has a question on why the liquidity coverage ratio or NFSR is dropping by whatever, he will end up asking people to join the room, explain why, print out paper again and again, and show maybe in a static PowerPoint or PDF. And that's really a cultural shift that we need to engage.
Right.
And that's my opinion, and the opinion of Luxoft is that technology is really helping there.
No, I agree, and I actually think there's a strong argument that banks are actually technology companies anyway. It's just they haven't realized it.
Yes.
Because if you think about most banking products, they only exist in the form of bits and bytes, right? There's no physical thing that you can kick with your shoe and it hurts your toe when you do so, or it's predominantly technology. But yet many banks don't actually think like that and operate like that.
But you know, I mean, we're an IT firm and we're hiring 300-400 people a month to support our customers. And when we hire developers today, funnily enough, and especially the good graphical designer, the cognitive expert, the ones who are going to make a difference, if we tell them, do you want to join and work for our customer who is bank A or Z? The response is,
no.
Well, no interest. They want to go and work for Google, for Uber, for all these fancy companies where they will have fun in what they develop. So you see, this is not just the cultural is even perceived at the level of how the young kids and the people perceive the banking industry today.
Right, okay, that's very, very interesting. Well, Pierre, thank you very much indeed. It's been a pleasure talking to you. Thank you.
Nice meeting you.